questions daily on my trading process and how I'm able to find significant levels with such accuracy. So, in today's video, I'm going to show you exactly how that works. Let's hop to it. First and foremost, my approach is rooted in value trading, focusing on our position within value and whether we are in value or overextended outside of value. The initial step involves examining the weekly TPO, marking the previous week's value area highs and lows and the previous week's point of control, or known as POC, as you can see on my chart in front of you. This practice is crucial because if we rotate back into the previous week's value area, there's a strong likelihood we could rotate to the opposite side of value or even test the POC of that week. Additionally, the previous week's value area highs, lows, and POC often serve as key areas for potential reactions. If these coincide with the level I'm currently observing, their significance is amplified for me. It's all about confluence, having multiple factors converge around the same price level to observe. For those needing further explanation, the value area represents the range where 70% of the trading activity occurred during that period. So on the weekly time frame, I'm identifying the high and low points of where we spent 70% of our time. The POC, or point of control, signifies where the majority of trading activity took place during this weekly period. Given that knowledge, it's a critical area to monitor, don't you think? Absolutely. After completing the initial analysis, my attention shifts to the candlestick charts. Establishing a high time frame framework of our critical support and resistance levels is my top priority. I always start with the higher time frame and then narrow it down to the smaller ones. First thing I look for in the higher time frame are key levels of significance that will provide me with a high time frame framework to base my analysis off of. Beginning with the monthly time frame, identify both significant and untested levels and mark them accordingly. You can see I have two of the three colors that you'll be looking at. Each one of them tells me something different. Red means the level is tested or has been played already, but has extreme significance to be above or below for a sustained move. Next is the one you don't see, which is the gray color. This means that the level is tested, and I'm looking to use it as structure and confluence at any other levels of interest arise around the same price point. Finally is the color purple. Purple means that the level is untested, and I should be looking for a reaction when the asset reaches this price. I use the color purple to mark the monthly and weekly levels, and pink to mark the untested daily levels, as you'll soon see. Once the monthly analysis is complete, I proceed to the weekly time frame and replicate the same process. As demonstrated here, after identifying the weekly levels, I overlay the monthly levels to see how they coincide with our weekly findings. It's important to note that with just these two time frames, we have a solid foundation to build upon, understanding what is key and what remains untested from a high time frame perspective. Pretty neat to see it all start to come together, isn't it? Now, let's check out the daily time frame. Moving on to the daily time frame, this becomes particularly important for me as both a swing and a day trader, as it aids in guiding my analysis to discern potential direction for the day or the week. However, I exercise greater selectivity concerning my daily levels, generally maintaining significant daily levels on my chart if they are relevant to our current movement or recent price action. Now that you've seen the levels identified on the daily, let's overlay the monthly and weekly levels like this. And there you have it. Our high time framework is now in place. This framework lets us know the levels we need to surpass or dip below to maintain a sustained move. It also highlights untested areas where we might anticipate potential reactions. Now let's zoom out real quick so we can see what it looks like. Beautiful. Beautiful. All right, now let's move on to the 4-hour time frame. Having established our higher time frame analysis, we move on to the final time frame that holds particular significance for me, the 4-hour time frame. This time frame is my absolute favorite, so much that I humorously refer to it in the Discord room as God's time. The reason behind this moniker is the 4-hour time frame only produces 2 candles during the regular trading hours or cash session, totaling 6 candles in the day. It's not as comprehensive as the daily, but provides us enough detail to discern what's happening within the daily candles. The 4-hour time frame also presents highly significant levels for breaking above or below, and untested levels here often yield substantial rewards. Therefore, I pay close attention to what's unfolding within this time frame. For 4-hour levels of high significance, I want to see price above or below for a sustained move. I put them in a light green dash, and for the untested levels, I use a dark green dotted line. Once these are tested and not of significance, I remove them completely. Keep in mind, this is just my color code. You can use anything you like, but I do this for charting on any asset so it keeps things uniform for both me and the guys who rely on my charts to make educated trading decisions. And here we have it, the significant 4-hour levels to monitor for both potential breakouts and untested levels to look at for reactions. Next, let's overlay the previously discussed higher time frames onto our chart. You'll notice that the previous week's TPO lines we drew in the beginning are now visible, providing an additional layer of context for our analysis. For swing traders, these identified timeframes are a comprehensive guide to your trades. And, just to point this out from our discussion earlier, here's the previous week's value area high, the previous week's POC, and the previous week's value area low. Do you recall the reason that I told you I put these on my chart is that if price gets into the previous week's value area, there is a good chance that we could rotate to the POC or even all the way down to the previous week's value area low. And we are starting to move down there as we speak. So it seems like this is a good rule of thumb. Looking at our chart, I say it's shaping up quite nicely. Now let's pull back and see everything is lining up and see what kind of structure that we can see. Pretty cool, right? I think it is. I know it is. As we played this weekly, popped up, played the monthly, popped up, hit the weekly, come down, played the monthly, popped up, held this weekly, came down, played this weekly, popped up, got a reaction from the weekly daily, popped up, played the weekly, popped up, played the weekly, came down, played this daily here, pulled back, and here we are. So as you can see why the high time frame structure is so important. While I personally also chart the 1-hour time frame for day trading, I'll spare you the repetition, assuming you've grasped the concept of the methodology by now. But going down to a smaller time frame shows you how all these levels come into play when we use them as our framework. And there you have it, folks, a bird's eye view of how my system operates, utilizing various different time frames to construct a roadmap for navigating our trading days and weeks. If you're keen on diving deeper, I invite you to check out my Substack via the link below, where I provide morning outlooks for the S&P 500 futures and SPX 4 days a week, pre-market. Alternatively, visit the website for more details on the course and the professional trading tools tailored for Sierra charts and Ninja traders that my team and I rely on a daily basis for real-time order flow confirmations on our trades. Now, go play with your charts, and I'll see you on the trading battlefield as we continue our mission to conquer the markets. See you there.